Butler Bear. And she's looking like a bull tonight. Let's see what happens tomorrow morning on the opening. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Got the live deer field cam up right now. And wow, man, lots of bait fish out there. Gonna try to get out fishing this weekend just because I need to get out in the water. Nice little break. If those you people in South Florida and other people in the world that have boats or go out fishing, you know exactly what I'm talking about. It's really not always about catching fish. It's just about being in a very relaxing environment and something different that you don't do all the time. And I hope you're doing that because the summertime is, well, Florida, our summers are like your winters up there. We don't go out much, and we certainly don't go fishing in the middle of the day or go to the beach in the middle of the day. Only the tourists do that. It is absolutely scorching hot, 90-degree weather down here. However, this is really the beautiful time of year for you northern folks up there and you folks in the northeastern states and such. Well, let's take a look at the quote of the day. The history of fiat money is little more than a register of monetary follies and inflations. Our present age merely affords another entry in this dismal register. And this is by Hans F. Sennholz. I thought the statement very pertinent. In fact, I felt like it could have been written recently, but it wasn't. And who is Hans F. Sennholz? Interestingly enough, I saw this. He was a German-born American-Austrian school economist and a prolific author who studied under Ludwig von Mises. He was also a Luftwaffe pilot shot down during World War II over North Africa in 1942. He spent the remainder of his life in the remainder of the war in a POW camp in the United States. And again, went on to be one of the smart guys at the German-born American-Austrian School of the Economists there. Studied under Ludwig von Mises himself. But what a very, very smart saying. And again, the only reason I'm bringing that up is because if you're going to quote somebody, you might as well know who you're quoting. So, interesting history, though. The guy actually spent time in an American POW. From 1942 on, man, the guy spent a lot of years in a POW camp in the United States and become a leading economist as well. Well, let's take a look at the spot prices, what's going on out there. Market prices right now, the market is open. The overnight markets are open, 1711.40. What was yesterday's low or today's low? Look at that, 1698. Intraday trading, they did touch below 1700, folks, but it didn't close there. It closed at 1730 on 1710 in New York. Is reopened in the overnight markets, 1711. Most of the monkey hammering and the manipulative, collusive behavior is happening in the COMEX and Globex markets overnight. We'll look at the 24-hour chart. But man, I'm just so tired of talking about it. You know, it's the same shit, rinse and repeat. Even me talking about their rinse and repeat collusive behavior. We'll take a look at 24-hour charts to see when it happened. It happened in the COMEX markets today. It's just to give you a spoiler alert here. But 1848, silver bounced off even a lower price. Take a look at that, 1818. It looks like they're trying to get it down to that sub $18 level. Will they do it tomorrow? Tough to say. Will they do it on Sunday night's markets? Tough to say. But folks, I just can tell you this. Silver is super on sale if you're buying the real stuff. Don't buy into their paper shenanigans. Buy the real silver. Same thing with gold. And by the way, what is the gold to silver ratio? Let's take a look. It's got to be pretty tremendous at the moment. 1,711.4 divided by 18.48.
It's approximately 92.6082.
Okay, not enormous, but we're getting back up into those. We're rising in the silver to gold ratio. Gold seems to be holding on to the $17 level, even though, as I said, they touched it below 1,700. You know, my personal gut feeling is I'm really surprised they got it sub 1,800 or much less than that. And here we are in the low 1710s. It just goes to show you that my crystal ball is no better than yours or anyone else's out there. But here we are. And same thing with silver, 1844. I was like blown away that we could get it below the $20 level. I'm thinking, well, there's only two ways we're going to go below $20, and I'm thinking sub $1,800 gold, if you're asking me, and sub $900 platinum. There's only two ways we're going to do this. One way is going to be that the economic markets are going to collapse overnight, and like 2008, it's going to bring down all the other markets, including gold and silver and other commodities. Or the second thing is that the markets are just so corrupt. The COMEX markets are so corrupt that they're going to allow this collusive behavior, and it's even going to get bigger. And hence, that's what we got. In my humble opinion, it's nothing to do with it's just collusive, manipulative behavior in the price discovery markets in COMEX, especially when it comes to silver. In gold, I do believe that GATA.org has it right. The Bank of International Settlements, along with big commercial short positions in all these markets, which are encouraged to do such, are the ones manipulating these markets downward. But no less, just sick of talking about it all, and really just look at it as silver, gold, and platinum being on a frickin' super sale. And some idiot, think about it. Think about walking into Walmart, right? You're walking into a Walmart, and some idiot sets the price of New York strips and filet mignon at $2 a pound. Okay. And that's kind of what you got with gold and silver and platinum right now. You've got some idiots, but they're not idiots. It's just crooks that are setting the price of gold and silver and platinum at super low levels, super on sale levels. And again, I wish I could go in and buy filet mignon and New York strips at $2 a pound. And that's kind of what you got going on with gold, silver, and platinum, you know. Let's take a look at the 24-hour charts right here and see what's happening. Again, the collusive commercial banging happens here. It kind of seesaws back up. Rises above the 17 mark, but take a look at there. There's your dip below 17. Tonight could happen again. General overall monkey hammering happening in overnights. Look at this. That is the overnight Globex markets, and there's no reason why the gold prices are going down in the overnight markets, especially since they're so thinly traded. Now, in the worldwide markets, that's a different story, but this is just collusive, manipulative behavior, in-your-face behavior. I think they've even given up the idea of trying to hide it anymore, folks. Same thing with silver. Take a look at this. Boom. But the overnight markets, too, trending down. And then they really bang it when the COMEX, NYMEX markets opens in the morning. And sideways again tonight. Let's see what happens tomorrow in the opening markets. And as I said, it's gold, silver, and platinum is on sale. And again, I don't think it's because some idiot at Walmart priced filet mignon at $2 a pound. I believe it's some idiot at Walmart is making a fortune by getting the price down to $2 a pound. Does that make any sense? Well, anyways, let's move over to, let's get out of the overnight charts. Great, silver is on sale. If you're bought in, folks, if you're bought into silver, unless you've got a lot of money and you're cost averaging and you don't mind doing it, good opportunity to cost average. However, I'm not advising that you go out and you take a lot of your, being diversified is a really good thing. In my personal opinion, I don't think anyone, unless you're extremely, extremely bullish, and this is my opinion, and only opinion that I made by hearing financial advisors back in the 80s saying that if you're extremely bullish, 20% of your money into precious metals, 20%. And I heard the average is around 10 to 15%. And remind you, this is from the 80s when I heard this stuff right here. I don't know what it would be now, but that's just what I heard then. Makes sense to me because, you don't want to put 100% of your money in gold and silver, 50% even. I mean, I don't know. I don't think I'd want to. But don't forget, I'm in the business, so I'm kind of forced to some degree. But no less, being diversified is good. And I'm really concerned that I just don't want to see people putting all their money into precious metals. I can't tell you about other investments, whether you should be in cash, real estate, cryptos, bonds, whatever it may be. I hope that you're smart enough to go out and find people like myself to listen to and other people that can give you good advice on what the best buys are in stocks, bonds, cryptos, and all that stuff as well. And I probably shouldn't be saying cryptos either, but I'm sure there's some good crypto guru out there was telling everybody at 60,000, oh my God, it's a gift from God, sell now. And, if I see a gold or silver bubble, I'd tell you the same thing, But no less, let's kind of move out of here. And a lot to talk about, just lower prices, summer doldrums. If you like to fish, if you like to hunt, if you like to drive fast cars, motorcycles, or just visit the grandchildren, this is a great time of year to do it, especially up north with your weather so nice. You South Florida folks, great time to do it too. You just have to do it indoors. Hey, listen, the CPI rates came out. They were talking about 9% inflation. I've been talking about this site for a long time. It's called Trueflation. Really cool site that tracks inflation rates. And look, they've been calling it 10.28. I haven't looked at it lately. I haven't brought it up. But they go into all the different types of categories: food, non-alcoholic beverages. I think the transport, where you see gasoline, category YOY rate would be 15.25%. 15%, 0.3% since yesterday. Folks, that's pretty dramatic if you think about it. This has gasoline cost including in it, and there's your health right there, up 3.89% over the year. Where else? Household and durables. God forbid, my God, alcohol and tobacco up 5.5%. Well, that's workable. That's less than sales tax. But man, if alcohol and tobacco start going up dramatically, you're going to see a lot of grumpy people out there. Speaking of alcohol, tonight's show, actually tonight, again, not a coffee show. This is a wine show, brought to you by Trader Joe's off-the-shelf red. Not too bad, actually. Okay, clothing and footwear, communications, education, recreation, and culture. Great site. I encourage you, this is not homework, this is suggested reading, to go to this site called trueflation.com. They've got all kinds of cool things that you can look at here. And they measure the inflation rate by the original way they did it back in the 1980s. At least that's the way I read it when I read it some time ago. And again, I had this site up quite a bit in the past. I just haven't brought it up lately, and I hope most of you have bookmarked it already, because it's already telling us what the CPI numbers are before they're telling us what the CPI numbers are. And this is actually probably more correct than the CPI numbers, which are a bit lower. Well, actually, very excellent article written recently by Ted Butler. That is, you can read it for free. This is not, I guess he puts it on, who is this? Silverseek or Goldseek? Silverseek right here. Ted Butler puts up his new articles sometimes on Silverseek, and I'm going to read it from here. I guess since it's up there for free, I can read it to you for free as well. A new article by Reuters concerning this year's default nickel on the London Metals Exchange helped me crystallize some new thoughts on the recent dramatic collapse in the commodity prices of all types, certainly including silver and gold. And again, I've kind of been talking about this in my videos here for a little while here, and alluding to what Ted Butler's talking about. But here, let's talk about that LME short and why Ted thinks that may have alerted the crooks at COMEX that their days are up here. Let me continue here. I would describe my new thoughts as being fully in line with all the major themes I've presented over the years, but now with clarity I hadn't quite anticipated. Please bear with me for a bit as I try to tie this in with the current quite pronounced meltdown in the prices of metals and other commodities. And of course, again, this is July 11th, but Ted's talking about the recent meltdown of precious metals, and including oil and other commodities as well here. The Reuters article didn't provide anything really new except to more clearly quantify the actual losses and margin calls involved when the LME rescinded and busted nickel trades on March 8th. And if you're not familiar with the LME and the nickel default, I recommend before you listen to the rest of this or read the rest of this as I'm reading it, that you pause this video and type in LME nickel short. And it's the most recent article on that. You can kind of get the whole story there. And let's continue here. Had the trades not been busted and trading in nickel not been suspended, the margin calls due from the big nickel short and its brokers would have amounted to close to $20 billion on that date, an astoundingly large sum. And Ted Butler is correctly right, an astoundingly large sum that the short, big whale short, big commercial, collusive mother. Anyways, when a customer can't meet a margin call due to an adverse market movement, that customer's brokers are obligated to meet the call to the clearinghouse and brokerage's own funds. If the brokers holding the customer's account can't come up with enough of their own cash to satisfy the margin call, then all the other members of the Clearing Guarantee Association are called upon to pony up the required cash to meet the margin call and keep the exchange solvent. Interesting there, folks. And again, feel free to kind of scroll back over this or find it on SilverSeek yourself, a Ted Butler article recently. And let's continue to read on here. It is the very association of clearing members on every commodity exchange that guarantees the performance of all derivatives contracts and gives the exchange legitimacy. So more or less what they're saying here is that one player can take down the entire exchange and all the players in that exchange. And that was about what was going to happen in the LME nickel default here recent. So large were the margin calls in nickel to the big short seller that the exchange decided to simply cancel the trades. Now this would be like, now let me get the equivalent to this, folks. The exchange, the LME, which is like the CME, and the CME is nearing zero credibility as well, like the LME. Basically, it'd be like a casino. Think of a casino floor. Think about that you're sitting at the table and a bunch of other players are sitting at the table playing 21, the blackjack game 21, and you're sitting at the table with a large whale that makes this, a large card player, a large whale that makes this casino, makes the CME, LME, tons and tons of money. Not only that, the casino is backing this large whale with their own money, okay? And all of a sudden, this large whale is at the table, and all the players beat him with the hand of 21, and he's got the hand 20. He's got 20, in his hand, all right? And all the players have 21. This large whale's about to lose. I mean, it's probably not the best way to describe a 21 game, but this large whale's about to lose everything. The casino comes in and says, we're canceling this game. Let's just have a new hand. That's exactly what happened here recently, folks. And I know I made it real. Actually, I probably screwed up the game of 21 by saying it that way. But anyways, you get the point. Suspend trading as it became obvious it would drag the LME into an overall default. And that's exactly, Ted Butler's right. This would have dragged the LME into a nickel default as well because they were backing this guy to some degree. Thereby suddenly ending 140 years of LME existence, all right? In order to avoid having the LME suddenly cease to exist, which would be the worst outcome possible, the exchange chose to cancel the trades and suspend trading. The next worst outcome, all right? So, but, Ted makes a good point here, and let me just continue on before I make my own comment. While I'm not condoning the LME's action in any way, I do, and Ted is really a good guy at looking at it from a different viewpoints. I do understand why it took the actions it did, why the LME took the actions it did. But nowhere in the Reuters article was it mentioned what the real problem was and how the LME failed to anticipate that problem, all right? Ted says, not to sound like a broken record, and I feel this way too, but the problem in the LME nickel was the existence of a concentrated short position that was so large so as to endanger the entire exchange when the size of the position became obvious to all. And the truth of the matter is, like the CME with these large silver positions, and this is my input here, my little parentheses, or not parentheses, quotations, the LME should have never allowed the nickel short position to grow as large as it got. No doubt, as a massive short position was established, its large size and artificially depressed nickel prices initially, just as it caused prices to soar when it became obvious that the short seller was in trouble, necessitating the busting of the trades and the suspension of trading. Again, what we had just talked about. And Ted says, had the LME properly performed its regulatory role, it never would have allowed that nickel short position to grow as large and concentrated as it did grow. Ignorance of the short position's existence is hardly a legitimate defense by the LME. Folks, Ted is starting to make a point here, which you're going to see in a moment, that this is the same thing that's happening in the COMEX markets, in CME groups, NYMEX and Globex markets, and the overnight markets that have been spoofed. And we know they've been spoofed by JP Morgan and all these. I'm not going to go into that. And there's no ignorance by the COMEX group, the CME group. There's no ignorance by these folks at all. They know exactly what's going on. And Ted points this out clearly doing the LME market with the nickel, what's going on. Okay, and let's continue on here. As the world's leading base metal exchange, a sudden and complete closure of the LME and the ripple effect that would have had most likely would have severely impacted the UK and financial systems elsewhere. This is powerful stuff here, folks. What Ted's talking about is how fragile the economic system is worldwide, and the banking system is that a market like nickel and the LME could actually crack and cause a default in markets all across the UK and across other places as well. That shows you how fragile. They're like juggling crystal balls here, folks. Crystal glass balls. I mean, seriously. And let's continue on here. On the other hand, since trading on the LME is limited to base metals, any financial system fallout would be a drop in the bucket compared to any similar problems that may arise at the CME Group, which, in addition to trading precious metals, now Ted's talking about the CME Group, and copper also offers trading in the widest variety of financial products, including stock, bond, futures, currencies, energies, foodstuffs, and grains. It'd be easier to list the products that CME doesn't trade. And Ted's simply saying that a market as small as silver, or the gold markets, but particularly the silver markets, a default in the silver markets by any of these big commercial shorts could cause a bust across all the other markets. And silver is such a small market. Think about this, but the way it's manipulating the amount of ounces they're trading through there, and these short positions are doing, it could bust them in a huge way. But let's continue here. As such, the CME Group is very much a member of a highly select list of financial institutions officially considered to be systematically important or too big to fail, and as I like to add on there as well, too big to jail. Ted says banking giants like J.P. Morgan, Bank of America, and others like giant asset manager BlackRock are also elite members of a financial institution considered to be systematically important, i.e., too big to fail, too big to jail. Should any of the financial institutions on this elite list ever fail, and he's absolutely correct here, no doubt there would be serious implications for the financial system itself, both in the U.S. and the world in general. And again, folks, what Ted's pointing out here is that the LME in the UK, and that's the LME that's a London Metal Exchange, so that's a UK entity, and that's United Kingdom. Ted basically said, and they knew it, the LME knew it, that if the nickel market, a fucking nickel market, was about to break the entire system at LME and in the UK, could have taken down the UK economy. We got the same shit going on with silver and more than likely other markets in the COMEX markets. There's such thievery. Where else, and I think Ted Butler pointed this out to me, where else could you see oil in the futures markets go to minus $40 a fucking barrel? All right, it's criminal, folks. It's criminal. I'm telling you, I'm starting to really believe the mafia runs the CME Group. Honestly, I'm starting to believe that's my opinion. All right, let me move on here. Therefore, there's no real comparison between the LME and the CME Group in terms of what an actual failure contract would mean to the financial system. And what Ted's saying here is that the CME Group, a failure, default in the silver could just cascade into something catastrophic. Maybe the government is involved with this. Maybe they are turning their heads to this major short positions. Maybe CME Group is actually trying to get these people to exit these short positions. But let me move along here because I think that's where Ted's going. In the order of systems important, with the number being important, if the LME was number 1, the CME would be 100. That's Ted Butler telling you how big a CME default in silver or any other market would be, all right? And he goes on to say that's why if the inadequate regulation on the LME in the case of not dealing with the concentrated short position in nickel before it was too late was serious, then any such failure by the CME, say let's just say in COMEX, silver or gold, would be so much more serious. And he's absolutely correct here, folks. This is why maybe we're noticing some big changes in these big in-your-face down movements. Maybe they're trying to allow these big short positions to exit without having a big default that would take them down as well, the COMEX down as well. Maybe they are in big trouble right now. Maybe they are trying to fix this. Not fix this, but fix it so they don't lose everything and or go to jail if that was possible, okay? All right, so would be catastrophic for the CME and financial system. And Ted says, plus I don't recall hearing of the prior concerns of a massive concentrated short position in LME nickel before the default, whereas I have been screaming from the rooftops about COMEX silver having the largest concentrated short position in any commodity in real world terms real world terms for decades. That's powerful, folks. I'm telling you, Ted's on to something here, but he's a smart man. He's smarter than most of us when it comes to silver. And by the way, highly recommend, if you got enough money in silver, or you're in the silver and gold business and you're listening to me, you need to have a subscription to Butler Research. Butler Research. He puts out a weekly newsletter and he explains this kind of stuff to him, to you. I'm sorry. Let me move on here and take a sip of this Trader Joe Red. By the way, if there's any wine companies out there that want to sponsor me, all you got to do is send me a good bottle. Simply put, the concentrated short position in the COMEX silver in its resolution is the most important factor, bar none, as anyone who has read any of my articles would attest. And man, really, folks, I recommend you read Ted Butler's articles, subscribe to the newsletter. Again, it's not cheap, so make sure. And if you can't subscribe to his newsletter, just type in Ted Butler Silver Manipulation in your search engine, and you'll come up with the free stuff. And Ted says, with that preamble, I'd like to come to First Circle and first refine my take on how I see the concentrated short position in COMEX silver and gold getting resolved after further digesting what occurred in LME nickel markets. Ted says that I first must raise a set of circumstances so coincidental as to be nearly impossible to be purely coincidental. Ted says the default and busting of trades in LME nickel took place on March 8th, 2022, and Ted's tying in some dates here on some things that have happened, some powerful things that have happened here. Let me continue on here. On the same day, the price of gold hit its all-time high of $20.80, while the price of silver hit $27.50, the highest it had been since June 2021. And since those price highs, gold has fallen more than $350, 17%, while silver has fallen by a much steeper 30%. That's huge, folks, all right? Also, and again, since that LME default, all right, March 8th, 2022, is that a coincidence? All right, perhaps not, and Ted points this out pretty clearly. Also, in the Commitment of Traders Report, COT reports, for positions as of that same day, March 8th, the concentrated short positions of the four largest traders indicated the gold short positions of 188,358 contracts, 18.8 million ounces, that's huge, and a concentrated short position of 54,187 contracts, which is 271 million ounces of silver, with all the concentrated shorts held by who else? The big 4 to 8 collusive, manipulative commercial short traders that on the CME market. I added that in. As it turns out, this was the largest concentrated short position for COMEX gold since March 2020, and for silver since June 2021. These fucking crooks just piled on, folks, and that's exactly what they did. Ted can put it out and point it out in these. Ted's like a forensic pathology guy, like studies dead bodies. Ted can look at these COT reports and basically say, well, this is what happened, this is where it happened, this is who it happened. And he's clearly pointing out this manipulative behavior, folks. He has for decades. He's absolutely freaking correct, and here you go. Man, it's turning out to be a nice evening. I might even go fish on the beach tonight, throw a few Rapalas out there. My attention span is short here, folks. I just saw someone walk by with a fishing pole. And yes, I am in the showroom at the store today. Okay, interestingly, since March 8th, the commercial-only concentrated short position in gold has fallen by more than 90,000 contracts, 45%, while the true commercial-only portion of the concentrated short position has fallen by 23,000 contracts, 42%. Folks, I'm starting to get into some stuff you may consider Greek, all right? This is kind of complicated stuff. I'm going to skip over to this right here rather than go into numbers. And Ted says his take on this. While I'm not into deep conspiracies, the events on March 8th, which culminated in the LME nickel default by the largest concentrated short positions or sellers, sent a powerful message to the concentrated short and COMEX gold and silver futures that they had better get their house in order and reduce their short positions pronto. Ted is suggesting that the LME fiasco that happened in the LME markets with nickel were really reverberated across the pond into the COMEX markets, into the CME markets, and into these big collusive commercial short positions to exit these positions. And let me go on how they're doing that. Ted's hundreds of thousands of allegations and complaints of concentrated short selling in COMEX silver and gold may have been brushed aside, but seeing the LME actually default due to concentrated short selling appears to have woken up the big COMEX commercial shorts. And that's exactly what he's saying here. Either that or events on March 8th were simply some innocent coincidences. Is that a possibility? Yeah, maybe, but I think Ted's onto something here. I think he's correct. Ted says, moreover, what I am contending now, namely that the big commercial shorts and COMEX gold and silver had put a motion in play to buy back and cover as many of their concentrated short positions as possible. I think he's correct on this. Looks to me to be the perfect and only real solution available to them. Ted says, and I believe this, and I've been saying this for a little while without even having a fraction of the knowledge that this man has. I've been saying that I believe these knockdowns are just a good way for these big commercial shorts and maybe even BOFA to buy back these massive short positions they have in the paper markets and in the physical markets, as it would be the case with BOFA. And let me continue here so we can finish up here. And the only way for the big commercial shorts to pull this off successfully would be to rig a market sell-off of all of the ages. Folks, that's what we're looking at. We're looking at a massive successful sell-off of the ages. Successful only in the way that nobody's doing anything about it. The COMEX is a bunch of criminals. TFT is completely useless, and I don't see any criminal prosecution coming on this. But listen, just the fact that there might be exiting the positions is really a good thing to hear. But I'd sure like to see all these fuckers go to jail. There you go. There's the F word of the day. Let's face it, had the COMEX silver and gold concentration short sellers waited too long to try to buy on the high prices that they did in the big short and LME, it was likely there would have been a default on COMEX, and with much more negative fallout given the systematic importance of the CME. In essence, the big commercial shorts on the COMEX have offloaded their short positions largely to the managed money technical funds. As I've been reporting, the managed money technical funds are enjoying their best 6 months performance-wise in decades, and ironically the money they made has allowed them to take on even bigger positions than otherwise. Of course, if it does turn out that the managed money traders do prevail when their current short positions are finally bought back, then that will be confirmed in the future CO2 reports. Again, folks, this gets into some technical stuff. I'm going to kind of move down here. This is a pretty long article here. My gosh, we'd go on for a little while. I hope you got the point of the whole thing, and you know what? Gosh, I leave you hanging halfway through an article after I've read it to you. But I tell you what, there's no better way to do this than for you to reread what I just showed you and catch up in the middle where I dropped off, because it's a great article by Ted Butler, The Perfect and Only Solution, July 1st, 2022, Butler Research. But I don't think you can read this new one for free. You have to find it on, where is it? I'm sorry, silverseek.com, and it's right there. Where is it? Oh boy, let me just go back right there. If you want to, oh boy, I don't even know how to tell you, but anyway, type that in, you'll get it. Read the rest of the article. Really good stuff by Ted Butler. I don't even want to talk about what's going on in ZH. Iconic Fed analyst. I guess we could get into the economics and stuff, but one of the top gurus out there just basically said Powell will be forced to end this quantitative tightening much sooner than people are expecting. And he believes that the inflation is going to get so out of control, unemployment is going to go so crazy, we're going to maybe turn from a recession into a depression. That's a possibility unless the Fed ends the QT, and he believes it's going to happen much sooner. What does that mean for the price of gold and silver? Holy crap. If they can get rid of these crooked fucks in COMEX, gold and silver should be right through the roof based on all the fundamentals. But folks, we're not living in a world of fundamentals. We're living in a world of crooks right now. But that too should change. It's going to blow up in their freaking faces. And I think they're worried about that. And Ted makes a perfect point in that past article. Hey, listen, I'm going to call it quits right here. Thank you for watching. And most of all, I'd like to say think for yourself. Always question authority. I'm not going to give you the whole speech why. If you watch my other videos, you know I go into detail about this. But I'm going to call it right here. Thanks for watching. Again, if you live in South Florida, I'm the guy to come to when it comes to precious metals, rare coins, and other things too as well. We have an antique and jewelry store. We're good at that stuff as well. But meanwhile, precious metals, that's my, and rare coins, my specialty. And if you live in South Florida, we're the place to go to. We'll beat APMEX, JM, and SD Bullion on their prices. And we buy too. So keep us in mind. Don't sell right now, folks. Terrible time to sell gold and silver. I can tell you that. That's what I feel. Great buyer's opportunity, no time to sell. And again, that's it. If you don't live in my area in South Florida, I'm sorry, folks, we don't do any shipping, but I do highly recommend you find yourself a good local dealer. Couple reasons. He should be able to beat the online guys. Plus, developing a local relationship because you may want to sell this stuff someday. And on top of that, keeping the money local is so important. Keeping that money in your community is very important. That's it. Hey, thanks for watching. Make sure you hit that like and subscribe button, and I'll talk to you tomorrow. Good night now.